The benefits, though, let's talk about the benefits, because a lot of people are not taking advantage of some tax deductions.
Yes.
So I want to know, obviously there's, a laundry list of tax deductions, but what are some of the most common ones that a lot of people might not be taking advantage of?
For sure. I'll just give you basically the rules for it first, and I'll break down the common ones.
Okay.
So basically the rules is, the IRS has 4 requirements in order for you to be able to deduct things for your business. Tax write-off, basically it's a reduction in your taxable income. So the 4 requirements, I call them tax-free. It's an acronym. And the first part of that is for F. So it needs to be for your trade, business, or profession. So if you're in business, you check that box. The second part of it is it needs to be considered regular for your business, right? The IRS calls that ordinary for your business. So for instance, I have a friend, she owns an ice cream shop. What's ordinary for her business, not ordinary for my business, right? I can't be writing out ice cream cones and spoons and refrigerators, but she can do that for her business. E is going to be the next part of that. It's essential. The IRS calls that necessary. So it's going to be necessary for you to operate your business, rent, utilities, all those different things. Employees are essential. And then last but not least, economical. This is the big one. Economical for your business. So the IRS calls that not lavish or extravagant under the circumstances. So basically that means based on how much money you make, that's what could determine what's reasonable for your business. All right. So one of the things I talk about is being able to write off vehicles, being able to write off the G-Wagon. All right.
Everybody want that G-Wagon.
Everybody want that G-Wagon, right? But basically the rule with that one is the vehicle needs to be way over 6,000 pounds in order to do it. And then, also needs to be used more than 50% for business use. And again, it needs to be for your business. Any business needs to be making substantially more than that vehicle, right? It's a six-figure vehicle, so you need to be making a lot more than that.
Do you need to be profiting a lot more than that?
You should be profiting too. You need to be profitable. Yeah, because basically what they want to avoid, because they know that let's say you make 50,000, you try to write off 100,000, now you're at negative, and then you're able to not pay any taxes, right? So they're not trying to do that. They want to make sure that you have a little bit over, and again, it's reasonable for that business. So being able to write off the vehicle, some common, I'll just give you a quick list, but common ones is business travel, right? So you can literally, sometimes you can turn your travel into your lifestyle into
like, baby, let's talk about my meeting. Don't tell me.
Yeah, it's cool because you can kind of turn your lifestyle into a tax write-off, right? So when you travel, right, for business purposes, typically that's going to be if you're going to a conference, seminar, meeting someone for business purposes, then you can write off the airfare, the flight, the hotel, the Airbnb, the dinners, all that kind of stuff, right? That's going to be a deduction for your business. Another thing is the business meals, right? So if you're talking to someone for business purposes, you're looking to do business, then you can go ahead and write that off. That's another opportunity. Supplies and utilities, so equipment as well. A cell phone is considered equipment. So if you're using a phone for business purposes, if it's 100% for business, then boom, 100% that bill out of here, right? Again, if you're making good money in your business. Paying your children through the business is a big one, right? So, you and I, we just had little babies, little ones, right? So
he need a job, and I can give him one.
So you could pay your child up to $12,950, which is the standard deduction amount. And basically, you want to make sure that they perform legitimate services for your business.
He's a model.
Well, you know what I'm saying. So I'm gonna speak on the model real quick. I'm gonna speak on the model real quick.
Legal or ethical?
You know what I'm saying.
It might not be legal or ethical.
It depends. I'll say this. I'll speak on a prior court case by the IRS.
Oh, Lord.
No, check this out.
Joking, guys.
No. I'm listen. You good?
I'm scared.
I promise. You good?
Okay.
I promise.
All
You good?
right.
Check this out. No, so there's a court case where the IRS, there was a 7-year-old and their parents paid their children through the business, and that was fine. So what I tell people publicly is like, hey, 7 years and plus, that is a legitimate.
That was going to be my question. 7
years plus is a good age to do it. Now people do it under that age, right? But then that's when the gray area. You know what I'm saying? That's when they're going to be like, hold on.
What was this baby really doing?
What was this exactly? And at the end of the day, they're not going to kick down your door. It's going.
I don't know. They kicked down Nicole.
Well, then Nicole might be, you know what I'm saying, she's in a different situation, but it's going to be they're going to ask you questions, try to understand why are you paying someone who's under 7 in the business. But I'm not saying that people don't do it, but
if you have a hair care line and your baby is truly the model for this hair care line, or you have a clothing line and he's literally the face of your baby, could that be possible? Maybe. It's still gray.
It's possible.
It's still a little gray.
It's possible. It gets in that.
So don't quote us on that.
It's in the gray area.
Okay.
But what I could say is past 7 is typically the safe zone. Anything else, you just got to be prepared to be able to defend your case, right? So if you're working with someone that can defend you, and like I said, a CPA can do that, and a enrolled agent can do that, and they can defend your positions. Like, no, this is exactly what the child was doing. You're recording the timesheets, right? You're recording the hours. They have a job description.
Photo, 1 hour because he wouldn't sit still.
There you go.
Okay, all right. As long as you got your receipts.
Yeah, you got to have the receipts, and you just got to be able to document it, essentially.
So I got one more personal question, y'all. I'm sorry, I'll be a little selfish, but I get paid to speak, right? That's business.
Yes.
Do my outfits count? Are they tax write-offs?
Ooh.
Real question. My makeup, does it count? Is it a tax write-off? It seems necessary. It seems like the FRE.
Yeah, it seems like it checks the boxes. I would say the IRS. So we're in a newer space now, right? So I think they're still trying to catch up to these times.
Okay.
But I'll tell you this: is if these are things that you want to write off, here's a couple ways that you can, that historically has been fine to do. So for your outfits, right? If your outfit has your logo or your business name on it or whatever the case is, typically they're okay with that. If you're going to speak at an event, right? One of the challenges with that is I don't think they like the idea of you being able to wear it in your personal life.
Wearing it again.
Yeah. So let's say I'm not. This is not legal professional advice. This is just a suggestion.
Disclaimer out there.
It's just a suggestion. But if you were to rent it, right? Go rent the runway or whatever the case is. You go ahead one day, boom, 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 like this. You know what I'm saying? Then
that's a way.
Then that could be a way to do it for that event if you could justify why you needed to rent it.
I can't wear this makeup again. What about that?
You can't, but yeah,
I'm risking it.
You just,
I gotta make sure I got me a real good CPA to answer these questions.
Exactly. But and that's another good point that you bring, right? So everyone's risk tolerance is different. You know what I'm saying? So some people might tell you that girl, go ahead, write it off. I'll put the paperwork and write the letters and do what I need to do. Other people are like, no, that's absolutely a no. And for me, I'm more of it's possible. We just got to figure out, how to make it make sense. How to make it make sense, because again, it's law. You know what I'm saying? In law, they keep it open, they keep it gray, intentionally to give you flexibility, so that they can't list out every single situation, right? But if you look at the law, and again, it checks the boxes, and you reference it and say, hey, this is worth in this situation, and back it up, then it's straight. Like another example is, there was someone that was working at the polo store, right? Polo Ralph Lauren, one of the requirements, you got to wear a polo. He was trying to write it off, and they said no, because again, he's like, we know you're about to wear that polo out in the club, and just
got the
be
logo
outside.
On it, though.
It got the logo of the company, but he was trying to write off under unemployed.
He was really trying. Oh, okay.
Yeah, it wasn't even for business. This is when they used to let you write off for unreimbursed employment expenses.
Ah, got you. Okay.
And he was trying to say, oh well, I have to buy this in order to work here, which is true. But unfortunately, they didn't care.
Okay, so last question about deductions, because I think this is a big one that a lot of people don't talk about, and hopefully I'm right about this. Writing off marketing, coaching, classes, are those legal and ethical write-offs? Can I write off this mastermind, this very expensive mastermind that I've invested in? Is it a tax write-off?
Listen, that's my biggest write-off.
Woo! Okay.
That's my biggest write-off.
Okay.
Yeah.
So
100%.
that, I think, gives people a little bit of a boost or eases their mind, because some of these price tags are like, baby, how can I make it make sense? But it is an investment, because if you can pay $100,000 and learn how to make $1 million, that 100,000 is nothing but a drop in the bucket. So
1,000%.
That's something to keep in mind if you've been on the fence about whether or not, you want to make an investment. If you have confidence in yourself that you can turn that investment into something, then you can also write it off without going to jail.